Shareholders are suing Silicon Valley Bank's parent company, CEO and CFO, over last week's bank collapse. SVB failed after chaos triggered by high interest rates led to a bank run last Thursday. Bank depositors pulled out $42 billion. It was the largest lender failure since Washington Mutual in 2008. Here to talk more about the fallout from this failure and the potential impact in the job market is our 9 News legal analyst, Whitney Traylor.
Whitney, good morning.
Good morning. Good to see you.
Yeah, let's start talking about the federal government stepping in. Is this considered a bailout?
Well, that's a debate. It depends on who you ask. So I've been reading a lot of what the experts have said, and they're saying that no, this isn't a bailout, because with the bailout, it was the investors that also got bailed out and the executives. So everybody was saved. And here, President Biden was very clear. He said, no, we're not going to, we're actually removing all of the management, firing all of them, and we're not protecting the investors. This is just for the depositors. So a lot of folks are saying, no, this is actually not a bailout. It's just a government intervention, and it's not taxpayer money because it's coming from a fund that banks pay into.
It seems like there were some insider shady things that were happening that led up to this. That's
exactly right. And so what's interesting is they said in 2018, they deregulated some of this, the Dodd-Frank Act in 2010. And so they said banks between 50 billion and 250 billion, they have sort of less oversight, if you will. This bank had 200 billion. And so with this less oversight, they're saying the managers completely mismanaged this. And now you mentioned some insider, the DOJ is getting involved because the CEO sold $2.6 million of shares 2 weeks before the collapse. So that implies that he knew something.
Let's go back to the Dodd-Frank Act that you mentioned, that the regulations rolled back a little bit there in 2018. We know that that was something done under the Trump administration.
Correct.
But people like the CEO of SVB, they were the ones asking for that to happen.
That's exactly right. And this, I mean, this really highlights this classic issue of government regulation and free market capitalism. And you see right now, we're supposed to have a laissez-faire free market economy, and we see the government continually having to get involved. And in 2010, again, it was the executive and investors that were bailed out. Now, even after all of those reforms, here we are just a few years later after some rollbacks, and we're having the same issue. So it's sort of like, you know, a lot of business people, conservatives, Republicans tend to say, hey, we want less government. We want to be able to do business the way we want to do it. But this highlights and really amplifies the issue of, well, when you do allow people to act freely, they get greedy and violate the laws and do these kind of things. So
real quick, because we're running out of time, but should we as depositors be worried?
Well, I mean, it's a concern. Now I heard another bank is on the chopping block, if you will, but they said this is why people are praising the Biden administration, saying, no, this was good that you came in at this time before it becomes an issue. But yes, people should still watch what's going on. Your FDIC coverage is only up to 250,000, so they're saying, you know, split your money up. Yeah. SVB, 90% of their customers had more than 250,000. That's why the government had to come in and protect everything.
Well, as always in situations like this, we learn what not to do in the future. Yeah. So
yes,
we'll have to stay tuned to what other lessons we have.
Yes, we got to act ethically in business.
Yeah, right.
Whitney, thank you.
Sure.